Hi, and welcome to the Financial Architect for Canadians. And today we're going to be talking about should you take extra money off of your paycheck for income tax purposes.
You're listening to The Financial Architect for Canadians with Alynn Godfroy and Glenn Baccaro.
Now, when I used to work at the keg, I worked as a server, and I always declared like my 15% for my tips and such, but I made sure that I talked to my employer and I had them take off an extra $20 off my paycheck just to make sure that I wouldn't get nailed when income tax season came around and I had to pay extra money on it. So what are your thoughts on that? And should people be taking money off of their paychecks?
My question, did it work well for you having the extra 20
did.
bucks?
It did,
okay.
Yeah. It was very rare that I ever had to pay for, when income tax season came around. I usually got a refund, which is awesome.
Great. So I would say you need to find that balance. I want to give you an example of a client that I do her taxes, and she had brought me her T4, and I entered her tax information. I went, holy cow, she is getting a substantial refund. And I thought, this can't be right. So I called her and I said, do you have extra tax taken off your check? And she said, yeah, I asked my employer to take $100 a week extra off. I thought, well,
that's a lot.
That is a substantial amount of tax. And I said, can I ask why? And she said, well, then I get a big refund at the end of the year. I said, okay, time out. I see what you're doing. However, I would like to give you some examples of things you can do a little bit better. Because the problem is, if her employer is taking the $100 a week off, there is a very small window when you're doing your taxes. So we're recording this podcast in February. So right now, everyone's getting all their T4 slips. So when you're doing your tax return in, March or April, you have that 2-month window where you're going to get that refund. So this lady's going to get, $5,000 back, but there's only 2 months out of the year where she can actually get that money.
Accessibility, yes.
Yeah. So I said, okay, you know what we're going to do? Give me a pay stub, because we were now into the next tax year. I said, let me see a pay stub. I'm going to plug your numbers in and determine how much should your employer take off. It turns out the employer actually only had to take off $20. So if it's similar to you. So I said, let's take that $80 a week and put it into a tax-free savings. So if poop hits the fan and you need some money, you can access it. You don't have to wait until tax time. What do you think happened, Glenn?
She probably needed access.
She definitely needed the money. She went through a split with her partner and she needed money for a lawyer. So the good news, it's unfortunate that she and her partner split up, but the good news is that she had access to money. She didn't have to borrow from someone. She didn't have to put the money on a line of credit for her retainer for her lawyer. She had the money available in a tax-free savings. She was able to take it out, pay the retainer to the lawyer, and not have to wait until that next tax return year to be able to get the money. So yes, sometimes it makes sense to have money taken off your check, but make sure you talk to somebody that, the person that prepares your taxes. Not sure if they would give you that sort of advice. That is something that I do for clients. The government's more than happy to take your money way in advance, right? Think about it. You're giving the government an extra $100 a week.
The government will take it.
Yeah, of course they will. So what we did, and I could give you dozens and dozens of cases, but that one really sticks out in my mind because I thought, my goodness, that's a lot of money to have taken off your check. And also, you have that much less in your pocket every single week to run your household. So for her, and she didn't need it to necessarily run her household. Also not the best person with savings. So this worked out really well that, that $20 extra came off the check. We set up $80 to come out every single week when she got paid. So it was out of sight, out of mind. And when she was in a pickle, she was able to get that money.
That's awesome. Do you think it's a good idea for service industry workers such as myself, like when I was serving, that is, to take extra money off? Because I know I was doing good, tip wise and stuff. So I just wanted to make sure that I wasn't getting hit when income tax season came. That's why I had the extra
extra tax or tucking it aside into tax-free savings. Think about servers when we had COVID, right? Not working.
Yes.
Think about someone that's maybe had all of that money, extra money taken off their check. And then, March hit, you were, March and April, and a lot of 2020, when things were closed down, if a server had that money set aside into tax-free savings, probably would have been a lot better than having prepaid a lot of tax to the government.
I can see that, yeah.
So finding that balance, right, I think is really what's important. It comes back to talking to a financial professional and having a solid plan. So that lady I gave the example of, we just put her in a very conservative investment account. She made a little bit of interest, but again, it's that accessibility.
Right.
And dealing with a financial professional that can give you that advice versus saying, yeah, sure, just give $100 to the government every single week. And then you essentially will get refunded a bunch of it later on.
That's like $400 a month. That's a lot.
I know. That's why I said when I was first entering her numbers, I thought, there's got to be a mistake on this T4 slip. Like your income tax deducted is a lot. There's something going on. And that's what it was, asking to have extra tax taken off.
So I guess your big takeaway for this episode is, if you're going to take money off your paycheck due to income tax purposes, just make sure it's the right call. You never know when you're going to need access to that money. So depending on what your situation is, it's always helpful to speak to a financial advisor or somebody in the financial know to find out if you're doing the right thing. Because you don't want to be paying the government more money than you have to when they're already taking so much money away from you. Anyway, any last thoughts at all before we close it off?
No, that's
it.
pretty
much.
Yeah, they are happy to take your money. I don't know, me, the way I am, I wait until I have to pay them every year. I pay installments. We can do a whole other, I think a whole other podcast on installments actually. But I wait until I have to pay them. I pay, the appropriate amount of tax, but I look at it on the flip side, when somebody owes the government charges you 5% the first month you don't pay your tax bill and then 1% a month. I don't want to give them my money to use. I'm sorry. Because when you owe them money, they're not so nice back. So that's just my principle. I don't know. Agree or disagree with me. It's up to you, but that's how I roll. So
right on. Well, I want to thank you for joining us here at the Financial Architect for Canadians, where we're giving you the tools to build a solid foundation for your financial future. We'll catch you next time.